Hello and welcome to Fintech Insider Insights. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. In today's episode, we're asking, will the future of KYC, Know Your Customer, be truly digital? As a wise man might have said, knowledge about your customers is power. More and more people around the world are using digital touchpoints to access their banking. In the US, for instance, mobile banking has become the primary method of account access for about 44% of the population in 2021, a huge increase from the numbers using it as their primary way of accessing banking before the pandemic. And yet, despite the widespread use of digital banking in our lives, many of the processes that we use to identify ourselves, whether to banks or in life in general, are still based on cumbersome and often paper-based processes, filling in forms, scanning printed documents. They're not truly digital processes. So as the technology powering banks evolves, so too must the methods through which banks, insurance companies and others verify who customers are and how to keep them safe. But Know Your Customer, or KYC, doesn't have a single one-size-fits-all definition. Different geographies have different anti-money laundering rules, different legislation, and even within the legislation there can be different ways to interpret or apply Know Your Customer processes. So in this show, what we want to do is look at what are the trends, approaches, regulations, and other changes that are going to shape the future of banking and Know Your Customer worldwide. So in this show, we've put together a panel of outstanding guests who are going to help discuss the current KYC landscape, how far we've come and how far there is to go, the technologies that are paving the way, and the regulatory challenges and what the future could look like. So we're going to discuss all of this and more in a packed show. But first, we have a few brief messages. Hello and welcome,
LFG people,
to Fintech Insider,
Blockchain Insider, 11FS Spotlight,
11FS Explores,
Open Mic Night,
After Dark. Through our podcasts, videos, newsletters, and live events, we have a direct line to a truly global fintech community. So if you're looking to sponsor and collaborate on content that connects with everybody from fintech beginners to the biggest VCs, then chat to our team at sponsors@11fs.com or visit 11fs.com to find out more.
Long live the community.
Let's get started. As always, I'm joined by a panel of fantastic guests who are going to shed some light on this rapidly evolving topic. First off, it's a welcome return to Fintech Insider for my colleague, Will Jones, Executive Creative Director and VP of Design at 11FS. Thank you for being here, Will. Can you remind our listeners about you and your role, please?
Yeah, thanks, Benjamin. I think this is the first time we're actually recording a podcast together, so it's great to be joining you for this. I think as my role title perhaps betrays, I lead product design at 11FS, so working with clients to build and launch new ventures or fix experiences that need improvement, really. I think KYC and I guess the broader topic of onboarding are always high on the list of important customer experience points to get right, because if you ain't doing that right, they're not getting through the door. I think very much I'll be coming at this from an experience design angle, so probably like a lot of people listening to this, I'm hoping to learn lots from our other guests here about the technology and regulation side of things, and fully prepared to ask the dumb questions.
I think you should be in good hands, because we have a welcome return for Emma Lindley, Managing Director of International Expansion at CAF and co-founder and chair of Women in Identity. Welcome back, Emma. What should our audience know about you and about CAF?
So thanks so much for having me on again. I'm delighted to be here. What can I tell you about me? So I've spent 20 years working in the field of identity. I was one of the first people at a company called GB Group back in 2002 when we built the UK's first digital identity proofing system here in the UK. Since then, lots of things have happened. Co-founded Women in Identity, which is a global organisation focused at getting more diversity into the digital identity industry, was about 5 years ago. And then last year, I joined a company called CAF, and we are an integrated identity platform solution, and we do KYC and KYB globally. And yeah, I'm leading all of our international expansion. Company started in Brazil, and yeah, lots of exciting stuff that we're doing there.
Fantastic. Exciting stuff. Welcome back. And it's also a welcome return for Joe Robinson, co-founder and chief executive of Hummingbird. Thank you for joining us. Can you remind our listeners about what Hummingbird does, please?
Thank you. Always excited to participate in one of these. Thanks for having me back. I'm Joe Robinson. I'm the CEO of Hummingbird. We are a platform for compliance teams. We power the workflows, the investigation work, and some of the regulatory reporting that they do. SAR filing, suspicious transaction filing, things like that, as well as customer diligence workflows. So excited to get into that topic. I started my career as a product manager. I was an early product manager at Square and led the dashboard products and later the e-commerce products there. And then I spent time in the crypto industry at Circle as the head of risk and data science, and then did a brief stint at IDEO, helping a very large bank in the US work on financial health as a designer and a product manager there. So it's been a fun tour of the industry.
The financial health bit sounds like a bit of a sort of detour from some of the other things on your CV, or your resume, but fantastic.
Yes.
Okay, well, let's start by looking at the current sort of KYC landscape and thinking about some of the sort of component parts of KYC. Emma, I'm going to ask you to start us off with a definition. What is KYC? I mean, obviously, know your customer, but beyond that, what is it?
Yeah, I mean, I guess when we started out having to do know your customer checks, this is predates probably many of us when we were working in this industry. People would need to go into a bank physically and prove their identity. They might be producing things like passports or driving licenses or utility bills in person, often to a bank manager that they might know, might know them reasonably well. As time's gone on, obviously we've got huge growth of e-commerce. Lots of people have started to use the internet, as we know, huge digitization, and that process has had to move online. And it's all the regulation that comes around having to open up all of these accounts. So KYC really is put in place by regulators to manage the risk of, around financial services. So when money is, when accounts are being opened or money is being transferred, we have to validate the identity of somebody. Now, if you're trying to do that in person, it's a bit of a pain, but a bit easier. When we've moved into the digital world, obviously all of the regulators said, well, we need to do that electronically. So now what we do with KYC today is we do that via checking databases or checking electronic documents, passports and driving licenses, but do those in an automated and online way.
It's often seen as a sort of regulatory mandate. It often is a regulatory mandate. But is Know Your Customer just about sort of complying with regulations, or does it also actually help protect the firms from risk? Is it something that kind of firms should be doing, kind of even if there weren't any regulations that said you had to?
There's two schools of thought on that. So, and I'll talk you through them. So, when I started out my life in the identity industry 20 years ago, the way that we would validate, there isn't huge dissimilarities in the way that it's regulated 20 years ago to the way it's regulated today. You would put in your name and address and date of birth, and that would be electronically validated against things like electoral roll, telephone data, and other databases, credit referencing databases behind the scenes. That hasn't really changed. What has changed is the changes in fraud. So back in the day, 20 years ago, when people used to do that electronically, KYC really kind of helped fraud, right? Because, you would know your data, you would know your name, your address, your date of birth, you might know your passport, your driving license number. Typically, those weren't known by other people. What's happened over time through things like data breaches, social media, phishing, all of those types of things, that data is now widely known by people. So the KYC processes that we have today, the kind of, you put in your name, your address and your date of birth, we have to kind of assume that those KYC processes don't really help with fraud. because that data might be out in the public domain. So KYC, dependent on the depth in which you go into, can help with fraud. But the way that we used to do it 20 years ago has had to fundamentally change to the way that we do it today. So, now we're seeing the introductions of other authentication methods, such as, biometrics and things like that, trying to bind people electronically to their identity documents, because we've had to, because the face of fraud has changed. But yes, so that's kind of giving you a kind of a broad answer there, but it should help with fraud. It should do.
Got it. Thank you. Joe, I'm going to bring you in with another sort of basic question. We talked about KYC, but there's also KYB, Know Your Business. Can you tell listeners what's the difference between Know Your Business and Know Your Customer, and what are the nuances? How is Know Your Business different or harder? Maybe it's not harder, but how is it different to Know Your Customer?
Yeah, absolutely. Well, many financial services are provided to commercial entities, right? Businesses, corporations, small and medium businesses, mom and pop shops, things like that. And, in order to provide the financial services to those companies, the financial institutions need to perform checks on who the owners are, who the people involved are, what the purpose of that business is, and other things. So I think in many ways we could probably safely say KYB is harder because it's also includes KYC. You're also looking at the owners, but usually more than one. And so it becomes a much more intense process of understanding how the company that you're working with will be moving money, the purpose of their business, things like that. It can be very, very complicated. There are issues, as many know, there are issues with shell companies. So companies that have been created in jurisdictions that basically allow creation of legal vehicles for anonymity. These are used to move money around the world. They can often be used for crime and nefarious purposes. And so the organizations trying to work with companies need to really understand who are behind those things. Listeners may have heard about beneficial owner acts. So understanding who is benefiting from the company, what the purpose of the business is, whether it's engaged in high risk or potentially illegal activity, whether it meets sanctions requirements around the world. So there's a lot. It's a very complex and deep practice area that can be very tedious and time consuming and costly for financial institutions.
And of course, costly, if you get it wrong, right? So I was going to ask you about the shell companies thing, because presumably there's a point at which you hit a wall in certain jurisdictions. There is a company, let's say it's in the United States or Panama or wherever, and that's owned in turn by a company somewhere else. And presumably there are certain jurisdictions where you just hit a wall and you can't tell. It could be owned by a perfectly legitimate business, or it could be owned by a huge international drug cartel, and you just can't tell. Is that right? There's just certain places you just can't. You get stuck.
That's exactly it. Yeah. Unfortunately, there are jurisdictions that do good business in setting up legal entities that are designed to preserve anonymity. And organized crime and the largest criminal networks in the world, of course, are very familiar with these jurisdictions. And so there's a lot of business that isn't legitimate. And you hit shell companies. I think the global banking population has acknowledged this issues. We see new regulations coming out about it, but it remains just a giant issue for the industry.
Will, I want to bring you in because one of the things that can be very frustrating for businesses, is if they can't get accounts approved quickly, or for consumers who are, trying to make a payment or trying to open an account and they have to go through very convoluted processes to prove their identity and so on. That can be very frustrating. How can companies kind of balance a good user experience with, thorough sort of know your customer? How closely linked does sort of know your customer come to sort of product design?
I think very closely linked, but then again, most things are fairly closely linked to product design. But I guess this one especially, and I think there's probably two sides to the product design coin when it comes to KYC, both the experience the customer gets and the frustrations, and also, I guess, the product design that drives efficacy for the provider themselves. I suspect Joe can talk in more detail about the second side of that coin. So I'd perhaps say part of a customer's experience, like KYC is a grudge journey. It's a part of onboarding that you kind of just have to go through. And it's hard often for customers to actually see a tangible benefit to them. It's just something that will cost them time and effort, and I guess keep them from their ultimate goal, which was, you sold me on actually being able to do a thing that allows me to put my money over here, and now you're asking me to go through this. I think we all know that's from, I guess, a retail banking perspective, improved massively over the last few years. But if you start to have a look at sort of corporates waiting over 3 months to use a new financial tool, it's, I guess, similar to the thing you're signing up for, having another job and you having to wait for them to complete their notice period with no real sense that they're going to turn up on day one. Now, actually, we talk about constraints in design and those being a good thing and trying to design around them. Compliance and regulations are often great constraints to try and design around, but ultimately non-negotiable. So they are things you have to design around. And I think if we think about what we actually need from someone as part of a KYC process, we're asking them to turn up with some information. We're asking them to sort of trust us in terms of the length of process and to give us that information. So there's a bunch of things we can do around sort of prepping people for what they'll need, managing expectations of how long it takes. Like, this is just good form design generally, even though a form is what we're trying to avoid. Like, this is where UX writing really comes into play as well, because like trying to engender trust, trying to help people understand how they might hold an identity document up to a camera and when something's gone wrong. This is all really important sort of design stuff. And then finally, I suppose, organizations, because they have to go through KYC, often see it as and get that information from someone. I think they often see it as an opportunity to get things from customers that they want to know rather than just things that they need to know. And that needs to be avoided, because we often work with people that have got sort of a huge set of things they're asking people, and we're going, why do you need to ask all this stuff? We know for a fact that all you really need is these things. And like, actually, to get to sort of lightning fast, low effort onboarding onto a product, just get the essentials up front for KYC. Find a smarter way to clue up on customers so that you can do clever things with it. It isn't just padding out unnecessary steps and preventing people from getting in.
I remember this from my days as a product manager. To your point, Will, I remember seeing UX studies that were analyzing the number of requested fields for the onboarding flows for financial services. And it was like, one service would have 11 fields required and another service would have 9 fields required. And it really is this game of how little can you ask in order to get the customer into the product and doing what the service intends without throwing up these gigantic application processes. So
I'm glad you said 11 and 9 rather than 44 and 68, which is
it's been carved down. I mean, it's very impressive how little information some organizations have been able to ask in an onboarding flow and still meet KYC requirements.
We obviously think 11 is the perfect number. But anyway, moving on. So as the technology has evolved, know your customer methods have changed and so on. Let's take a look at how some of the sort of changes in underlying technology and how that's changing the game. But there's one point I just want to come back on. Will talked about sort of onboarding and know your customer as part of onboarding, which is absolutely right. But hasn't there been a shift from thinking about security more widely as a sort of one-off process when customers come into the door to more of a sort of zero trust environment where it actually becomes more of a perpetual process? I mean, Joe, just very quickly on that, is that the case? Is that something you're seeing that firms are thinking about know your customer now as more of a sort of ongoing thing rather than a one-off thing?
I think that you have to. In fact, I think if you're viewing it as a one-time thing and not performing some form of ongoing monitoring, you're going to run into regulatory issues. And you see this just with the customers who will sign up for one intended purpose of the account and then begin to use it a different way, particularly with commercial entities, businesses and companies. You may see somebody signing up for one line of business or one expressed purpose. In the US here, we have emergent legality of marijuana, for example, and you'll see businesses that sign up unrelated. They may advertise marijuana related, paraphernalia or T-shirts or bumper stickers or things like that. But then, a few months later, the institution will realize they're actually a dispensary, which can create all sorts of regulatory issues. So I think that the process of ongoing monitoring is almost just as important as the initial onboarding. But it's a practice area that can be very difficult to orchestrate.
Yeah, I would agree with that. I was just going to come in there and just say that, obviously you have to do things like politically exposed persons and sanctions. And, I think we've seen that over the last few years, certainly with the change in, the geopolitical environment. The war between Ukraine and Russia, there was just kind of overnight, a whole bunch of people went on to things like the sanctions list. And if you weren't monitoring consistently, and if you didn't know that as a business, there was a real scramble by those businesses to have to go, we now need to go and screen all of our customer base to make sure that these people haven't ended up on being on, the sanctions list. So I think, that it's to Joe's point, doing the ongoing monitoring is just good practice, and it's a regulatory requirement as well.
What are some of the technologies that have come in, particularly in the last sort of 4 or 5 years, that are helping firms do KYC and KYB more efficiently and more effectively? Maybe to you, Emma, first. Obviously the internet, obviously data, but what else is making it easier for for companies, or helping companies with that? What technologies are making a difference?
Biometrics have been a big one. I think that we've seen some markets move to those almost entirely. In countries where perhaps they've not had any underlying identity information. So India, for example, with their Aadhaar program, they had to go almost entirely to biometrics first, because a lot of people in India didn't have any kind of government issued documentation. So I think biometrics have been one of the big ones for me. Certainly there's also been some challenges with data privacy and new data privacy regulations coming in about how data can be used. But I think, so one of the interesting things I think that's evolving out of the space with regards to that are things like privacy enhancing technologies, so they can take the data and obfuscate it so it can still be used and it can still be shared, but without you actually perhaps sharing the data. And we're also now seeing a move towards things like decentralization, so that data resides with a bank or with an organization, and then what you're doing across a decentralized network is you're actually sharing insights rather than sharing the actual data itself. So I think those are some of the kind of key technologies that I think we've seen that have helped us protect data, allow it still to be shared, but also biometrics as well, that kind of over more in your face type authentication technology.
What about the oldest technology, the person? Joe, I'm going to bring you in on this one. So what's the role of people? Because this is an area where sort of automation and artificial intelligence obviously brings in some benefits, because sometimes computers can spot patterns that people can miss. But then equally, people can sometimes see information that's obvious to us, but might be missed by a system. Where's the balance? And maybe Will, I'll bring you in on this as well after Joe. What's the balance between people and sort of automation and AI in this area?
It's an interesting one. I think what we're seeing with the emergence of large language models and AI are AIs that are actually very good at cross-tabulating information across many different sources and documents. I would have, 3 months ago or something like that, said that the pattern recognition that humans bring is a very important part of the process. And don't get me wrong, I still think that is. But I think we're seeing AI get better at that as well. The human process is probably the ability to take it all as a whole, particularly in KYB or in large, groups of retail customers, consumer customers, and see, what am I seeing across this group? What am I seeing in terms of pattern recognition? What things have we had problems with before? And just sort of remembering these pathways that customers and organizations can go down that lead to problems down the line. So,
what's your take, Will? Is there still a role for people?
I mean, look, my understanding of the back end of these sorts of things is that we are looking at large sort of data sets at one time. People have a finite set of cognitive abilities that machines can just do a lot quicker at greater scale. But what they can't do is perhaps communicate information to clients or users when there is an error, when something is wrong, when a payment can't be made for various reasons. But it can provide more information and do it quicker. So there's perhaps, and as in a lot of industries, a shift in focusing where humans are useful and where they can benefit the engagement with the business, rather than necessarily doing sort of the checks and measures.
I feel that the advances in AI over the past few months in particular, and certainly the past few years, have been so great that we're increasingly sort of searching for the role for people in some of these processes. Emma, what role do people play in the sort of KYC processes themselves at CAF? I mean, obviously you've got people in marketing and all sorts of other roles like that. But to what extent are people playing a role in some of your monitoring processes?
Yeah, I mean, so we actually have quite a big team of people that look at documents, forensic document experts, because, AI is great. It's evolving hugely at a really fast rate. I think that, there still is a place for people. When you get through those kind of really difficult documents, or perhaps the lighting's not taken well. And it does one or two things within that kind of the document verification, identity documentation sphere. What it does is it stops the fraud better, because you get those kind of cases where it is a fraudster and you get a forensic document expert that can actually examine the document, and particularly in markets where documents are really complicated. So, we live in a world in the UK where there's lots of standardization around documents. When you go out globally, some of those markets, documents are really complicated, right? So Brazil, for example, has 3,500 identity document types. Wow. That's kind of mind-blowing. And so, you still need humans sometimes to look at these documents and go, is it a real document? Even looking at the perforations on the document. So I think, they help stop the fraud. The other thing they do is they help good people get through the process as well. Because sometimes, to Will's point, that it's a balance of UX, trying to get somebody to understand that they're supposed to hold the camera a certain way, take a picture of the document the right way. People are people, humans are humans, right? And sometimes they do that incorrectly. But that doesn't mean that they're a fraudster. It just means that, they haven't been able to get through the onboarding experience. And having a human sometimes look at those exceptions and go, actually, this is an all right document. This is an all right application. You can actually help support with people in the back end, help support good applications going through. So, I think there still is a place for people. And I don't think we're there completely yet with automation in the identity space.
I have an interesting example of what you're saying, Emma, where we had a fraud ring. This was a few years ago, so I'm not sure if image recognition and identity validation would catch this yet. But we had an interesting fraud ring where the unifying characteristic that we spotted eventually was that the passport photos from identity validation of the whole document, they were flawed the way a human would take a picture of a passport, and there was glare and things like that. But we spotted that the subject's signatures were all very elegant and all very perfect. Even though the lighting and the shadow and the things like that were changed, it was sort of like, who writes like that? And we would find dozens of subjects that had these probably generated signatures, but they were clearly much better signed than a normal human would sign their own passport document. So it's interesting for this discussion. It's how would how would image recognition catch that? How would you spot that anomaly through machine learning? Maybe it's possible today, but it would certainly be difficult given each signature is unique. And it was something about the quality of the lines in the signature.
I love that. As someone who's been mocked for their entire life for their bad handwriting, I love the idea that bad people have immaculate handwriting. Wonderful. Okay, we're just going to take a very quick pause here, and we will be back very shortly.
A lot of you know 11FS for our chart-topping podcasts, our events, videos, reports, and a bunch of other cool stuff that we do. But what a lot of you don't know is that this is just all our side hustle. We do so much more than that. At 11FS Ventures, we're partnering with ambitious businesses around the world to design, build, and launch truly digital financial services. We are building banks, shaping new propositions, and growing existing offerings that change the fabric of financial services. And our design, research, strategy and engineering experts are working to improve your customer's relationship with money. To find out a little bit more, check us out at 11fs.com/ventures.
Okay, in this next section, we want to examine the role that regulation plays in KYC and how that might change and evolve on a global scale in a truly digital future. So I suppose the first question, and maybe I'm going to throw this one at you, Emma, is what comes first? Changes in regulation or changes in the sort of technology and know your customers? Is it that sort of the technology vendors who are coming up with better solutions are then sort of influencing the regulators, or are the regulators sometimes influencing the technology vendors? Or is it a bit of both? What's the interplay between the regulators and the technology vendors?
It's a good question. I think it's a bit of both. So if I go back to when we built the kind of UK's first digital identity proofing system, at that point in time, even if you could check against databases to verify due to KYC, you still had to, in a bank branch, the regulation said you still had to physically see passports and driving licenses. So we worked out a way that you could verify passports and driving licenses electronically using the MRZ numbers off the documents. And we actually went to the regulator and kind of not lobbied them, but we made the case.
Encourage them.
For saying, encourage them, made the case that actually checking documents electronically was, automating it was going to help with speeding up the processes, increasing of digitization, moving the whole process to online. And actually, the digitization and the automation is there to replicate the very best people on their very best day. And then you still have, the manual review team to look at their kind of exceptional cases. And that's why in the UK the regulation was changed to allow document verification. So I think, there's a very kind of concrete example of where from a industry perspective, and we weren't the only ones, right? There was a kind of a swell and the banks came with us and said, we'd actually like this to happen, right? Because it will make things cheaper and faster and easier for customers, right? So that's an example of where it's been an industry-led thing. But I think we also see regulators, putting new regulation in play. So if we look at, marketplaces, for example, they are coming under scope of increasing regulation, right? Because they're kind of like peer-to-peer marketplaces. Often you've got people buying and selling peer-to-peer. Sometimes you've got businesses as well, because KYB comes into scope. And so there's a new set of regulations, both in the US and also in Europe, that are bringing those organizations into scope of regulation around identity verification. So I think it's a bit of both. In terms of where the innovation happens, the innovation, in my opinion, it happens in the market, right? That doesn't necessarily come from regulators. I don't think they're coming up with amazing, innovative ways to do things.
You're not going to get a job on a regulator from this podcast, then.
I'm sorry to all the regulators out there, but the FCA is doing stuff in the sandbox. I think it's interesting. They're letting people play, but I don't necessarily see them as being the innovators. They're there to they're there to explain to the market what the outcomes need to look like. This is what good looks like. They're there to take the regulation and turn it into something that, should make the market come up with the innovation. And it's the same with governments, right? Governments, if we look at the UK digital identity system, the government's not coming up with the innovation. The government's coming up with the standards, they're coming up with the rules, and then they're saying to the market, you innovate, you make the technologies. Here's the outcomes that we need to meet, and you are the innovators and you build the technologies that suit these needs.
Love that. Will, from a design perspective and a customer perspective, what should good look like, as Emma put it?
It's interesting because we're talking about governments. I think in other countries where governments have had more of a hand in like a central identity standard, it's kind of, and actually driven that's kind of makes it look good from a customer's perspective. Like we've done some work in Singapore where they've got SingPass, and I know there's a bunch of other regions where, as I guess a business, you're giving up some of your customer experience to an unknown platform, but it's the government, and people pretty much expect that to be slightly clunky but fairly useful in various different areas. So I still think in an ideal world, you're going to, as a business, sort of go through a KYB process once with a business, and then wherever you go next, you've gone through it. Like that's never going to exist because everyone's got their different checks that they need to do. But like you don't want to have to repeatedly do this, because I think customers don't really necessarily, especially retail ones, draw the line between authenticating for something and actually having to go through a KYC process. They don't know which industries are regulated or not, or require this sort of thing. And I think, some of the ways of authenticating to any service become so easy these days that actually it's a bit of a shock when you're being asked for a lot of different things, especially when like your expectation is set by the easiest thing to sign into, and not having to go through all of this, to be perfectly honest. So the more that we can make that repeatable, centralized, and I guess friction free while still being trustworthy, that's the dream for consumers, not necessarily for regulators or businesses, but customers just don't want to see it more than once.
Thank you. To build on that point, Joe, I want to bring you in. Fraud and money laundering and sanctions are increasingly sort of global businesses, if we can call them that, certainly global operations. And yet regulations are often national. Certainly forms of identity verification are national, if not lower level than that. I'm amazed by your Brazil statistic, Emma. Do we need to see more sort of collaboration and cooperation between sort of regulators to try and create maybe more international standards? Would that help? What needs to happen, Joe?
This is an area that I actually find fascinating and sort of inspiring about this industry is that although regulations are local, as you say, they are actually, they sort of rhyme with each other. There are multinational bodies like the Financial Action Task Force that ensure that member states, meaning the different countries participating, have appropriate anti-money laundering controls, appropriate anti-financial crime, and so you see, jurisdictions implementing regulations and laws that are sort of similar to each other, so that those countries can actually interact with each other. I find that to be a fascinating part of it. It's the regulations are, of course, local, and they're the domain of individual countries, but there is already a lot of collaboration on these matters. There perhaps should be more on the specific problem of identity. I don't think you see a lot of that multinationally. And to Will's point, identity is actually, an issue and part of the domain of our governments, right? Our governments actually give us a portion of our identities as citizens, our tax IDs, so that we can be charged appropriate taxes. But in many ways, I wouldn't want to see my identity and the authorities that sort of verify my identity privatized. I think that's actually part of what a government should provide to its citizens, is that sense of identity. And there could be more interaction and collaboration internationally on that, so that there's more cross-border finance and availability to those products. Those are particularly challenging areas in payments and remittances and things like that today.
Love that. Emma, you mentioned Aadhaar earlier in India, the Indian digital identity system.
Yeah.
Would more widespread adoption? I mean, obviously, India is now the most populous country in the world. I believe it overtook China, like in the last week or two, apparently. But would more digital identity schemes like Aadhaar make things easier from a sort of know your customer standpoint, or possibly even a know your business standpoint? Would it help if more people around the world had a digital identity? Or is that really only part of the puzzle, the wider sort of know your customer puzzle?
Yeah, I mean, it would help. I think the thing about identity schemes, digital identity schemes, is that they are very localized. So they're very country specific, because it has to start with the actual culture itself. So who are the humans that live in that particular country? Has the government issued those people, identity documentation before? How, when they enroll for that identity documentation, how secure is that process? When they get at that identity documentation, how is that then, digitized? So all of those different kind of processes to build up someone's identity documentation that they then prove their identity with is different from market to market. So I think it's kind of, it's feasible to make them work within a particular market. Where it becomes more challenging is when you try to get them to work across markets. So could I, if somebody landed here with their Aadhaar in the UK, would they then be able to go and open a bank account? No, because the bank would go, what is that? I don't know what it is. And that's where it becomes really challenging. Now, in Europe, obviously, under the EU, they're trying to do something around, they've been trying to do something for years called EIDAS, which is an agreement between EU member states to recognise each other's digital identities. It's complicated. Right, it's complicated. It's going to take a long time. So trying to get digital identity schemes to work within a given country, I think that's is still complicated, but it's less complicated than trying to get digital identity schemes to work from country to country.
Okay, we've got 2 minutes left, so I'm going to bring you all back to the sort of question that we posed at the top of the show. Will the future of KYC be truly digital? So I suppose another way of expressing it is, are we still going to be identifying ourselves with paper documents like driving licenses and passports in 5 or 10 years' time? Will, how digital is this going to be?
If we're talking 5 or 10 years' time, I think we'll still have some paper items, or at least plastic. I think it would be too easy for practical scenario and not KYC. Someone gets pulled over and their phone's died. How could they possibly identify themselves? Like you need access to these documents for various things. But I think we will see a huge amount of progress in the way that these documents can exist as a digital artifact and can be processed more quickly and easily.
Joe, will the future of KYC be truly digital?
I don't know. Will raises some interesting points. I'll add a futurist prediction here that it may be digital, it may be paper-based, but it will certainly be more biometric because, to Will's point, if you've lost your phone, you've lost your wallet, what else do you have? Well, you have your biometrics, and those are actually a very good place to start for identity.
Nice. Emma?
So I've been asked this question quite a few times before, and I always say I think it's going to take longer than we think, and I always kind of use the example of saying, we look at payments. Electronic payments have been around for an awful long time, right? And even a global pandemic didn't kill cash. People are still using cash, right? It's had a really good go at it, right? But there's still people out there using cash. So are we still going to see some paper-based documents in regions of the world? Yeah, of course we are, right? Because it's going to be fragmented and it's going to be messy and it's going to take a while for us to get there. But we will see really big leaps and bounds in increasing digitization in identity. But it's not going to be 100% digital within, 10 years, I don't think, across the world.
I think you're probably right. But I do like Joe's point about just because your phone has died doesn't mean you don't have an identity. Anyway, that wraps up today's discussion. So thank you so much for being such a wonderful panel and joining me for this conversation. Where can people find out a little bit more about you and your companies? Emma, where can people find out a bit more about you?
You can find us at www.caf.io, and you can find Women in Identity at www.womeninidentity.org.
Thank you. And Joe?
You can find me at hummingbird.co. That's probably the best place.
And Will?
Just find me on LinkedIn and reach out. I'd love to chat. And I think there's probably something topping and tailing this that tells people exactly how to find 11FS.
And as for me, Benjamin, you can find me on LinkedIn, Benjamin Ensor, or on 11fs.com, where you can find out more about what the team are up to. So thank you to all of you for listening. If you like what you've heard, please do subscribe to our podcast. Please do let us know what you'd like to hear about in future shows. If you want to join the conversation, join us on social media. Just search for 11FS or Fintech Insider, or you can even email us at podcasts@11fs.com. Thank you all so much, and goodbye.